The loonie has taken off today on news of a surprise Bank of Canada interest rate hike. We'll now take a look and see what does that mean for its longer-term prospects. The Bank of Canada had raised interest rates once at its July meeting, and most pundits out there, myself included, had been figuring that this time around, rather than raising rates again, they would hint towards a rate increase later this year. However, the strong GDP report announced last week for Canada clearly has given the Bank of Canada the confidence and the pressure to raise rates sooner. So they have gone a second meeting in a row with an interest rate hike, another quarter point, this time to 1.0%. In the statement was somewhat mixed. They did talk about the strength of the economy and that inflation is tracking as it's expecting. However, they did note that they're also going to take a look and see what do higher rates mean for the Canadian economy, in particular for high consumer debt levels, and likely also, I suspect, on the real estate market as well. Although recent figures out of Vancouver suggest that certainly some markets in Canada are still continuing to do really well, even with the some of the restrictions on foreign ownership that had been brought in. So the Canadian economy has been humming along. When we do see a growing economy, we do expect that interest rates will continue over time. Whether there's another rate hike coming this year or not remains to be seen. We'll be watching, but people certainly will see that Canadian markets are likely to react significantly to economic data as it comes out over the coming weeks. The next significant one, by the way, is Friday. We get Canadian unemployment numbers, so watch for that. In terms of the short-term action, we can see here this spike here from 80.60 up to a peak near 80.30. It's since come back off towards 81.70 in what looks like normal backing and filling. This is CAD US dollar, the one that's generally reported on more frequently in the Canadian media. Looking at the longer-term chart for CAD US dollar is quite fascinating. What we see here is that this week we've broken out over the 200-week moving average. We've previously broken out of a long-term downtrend, the downtrend that started at the peak in 2011 down to the lows at the beginning of 2016, and we've actually been recovering, but now we've actually broken out of this long-term downtrend. Also, we're starting to see some of these Fibonacci levels go. We had cleared 23% retracement. The next resistance for CAD is in and around 83 cents. 82.75, 83 cents, close to this level here. The 38% retracement of the previous uptrend in the 2015 peak is here about 84 cents even, give or take a few pips. I'll now take a look at the what this means for US dollar CAD, the one that's more frequently traded. We could see that this uptrend that started in 2011 peaked in early 2016. We had an initial decline, and we've been kind of creeping back upward. But since the Bank of Canada started talking hawkish back in May, the loonie dollar CAD has been driving down. The loonie's been recovering. Recently here we've broken the 200-week moving average. We've also broken this long-term uptrend support line to signal the start of a downturn. That break came in and about 124.35. We're now trading down around 122.20, having reached a low of 121.45 on the day. The next significant support area here, the 2015 low, is in and around 119.15. Realistically, though, I'm thinking this 120 even to 120.30 zone as potential resistance. Something else to note here, we are getting a little bit oversold on the long-term RSI, also a little bit overbought on the other side of this pair, and so because of that, it is possible that if we do get to some of these levels, we may reach a point where we need to see some pausing or consolidation. But certainly, with the Bank of Canada having turned the corner with on interest rates raising twice now, and with the loonie also having turned the corner, there's some significant longer-term trend changes underway with this shorter-term market action.